Hello students, today is our class number 13. In this class, we will learn about engulfing patterns, then liquidity, and after that the entry module. So if we look from here to there, where did we start backtesting? We started backtesting from here and have brought it up to this point. While backtesting, the count we gained is also in front of you here. Now let's start with the engulfing pattern. I always tell you about engulfing so that you can practice it visually. Only visual practice will help you start seeing these things in the real market. All right. First, we need to take the engulfing pattern, which is only for day one. For example, this is a bearish candle and a bullish candle. If the market starts from anywhere here, you need to take it from here. And its wick should have swept this low. If it sweeps this low and closes here, it will form a simple bullish pattern for us. Like here in the market, see this and it sweeps upwards. So this is the closing. All right. And after that, if we look here, there is a bearish pattern. This is a simple bearish pattern. We do it like this, and its bearish candle has also swept this low and closed below it. So this will be a bearish setup for us. All right. Okay. And after that, how do we take the entry? For example, this is a closing setup when the market is coming down like this on H1 or 5 minutes. And when the market changes its first structure, it will set a buy or sell setup. Then we refine the liquidity range. We bind it. All right. If you don't understand liquidity, I explain it in every class. Buy setup, sell setup. All right. And when the market is falling like this, the sell setup and buy setup mean that from here to there, the market has completed a cycle. The market will cycle, pick this, pick that, and pick this. So we sell it here. This is a simple way to refine liquidity method. And one thing is that whenever we open a trade, we try to sweep the low of this candle and then the market becomes bullish, which is more suitable for us. Like here, we sweep this low. So they planned the trade in the previous class. So as you see here, we planned the trade after sweeping this low. We planned the trade after sweeping this low. You must keep this in mind. Take a screenshot and save it. All right. So now let's move on. We completed our back test up to here. Next, where were we? We were here. All right, here. You see, we marked this engulfing. Look at this low and it's closing above. And if we see what was done in the market, we see that first this low had to be swept. All right, it will sweep this low. If you see here, this engulfing flip is also used. If the market opens and taps it, the market can also sell. And if you look at the small zone above, it is also about to be tapped. All right, these are two situations. Otherwise, based on this signal, if the structure changes on H1, we will sell it. Now let's go to the time. See what the market is doing here. It is tapping in its zone and we will go straight to H1. On H1, we will wait for the structure to change. We wait. The session is still London. So we wait a bit for New York. We wait. And then if we see where the daily is rejecting, it goes near this zone. It is rejecting, which if you see here, its structure is coming. We are still waiting for New York. We wait for what New York says. Look here, New York has also picked its previous sessions, Asian and London here. All right, now the structure will change. So we will plan the sell based on this. But if you see all sessions are closed here, if you see all sessions are closed here, if you see all sessions are closed, meaning it's Friday. So now we wait for Monday. We wait for Monday here. We wait for Monday. Look here. Monday open. This is the Sunday candle. This comes in back testing, not in the real market. So now look here on Monday. The same situation is there. The previous day's high was swept. After that, the market is in its engulfing zone. And look here. If the structure changes, it comes in our favor. So we will sell it. If you look at 15 minutes, the structure hasn't changed yet. If you look at 5 minutes, it hasn't changed. So if we put it on 5 minutes, look at the next bar. See here, buy setup, sell setup is happening. All right. This is its liquidity. So we plan its sell here. put it on the next bar. See, the market is going to dip in the same zone. So we sell it here. We put a little sell here. Look, the market is dipping in the daily, so we can easily come to this low because after this low, we had to exit. It hasn't picked this low. So which session is it? It's still the Asian session. If we trade, then if it comes to this low, we will wait for New York or the London session. Here we have planned the entry with 1 minute, sorry, 5 minutes. If you see here, we wait for the H1 structure to shift here. And if you see here, H1 is also in our favor. Here, take and buy setup, sell setup. Where is the liquidity lying? It's about this. All right. In the Asian session, it can also stop out, but sorry, New York. But we let it run. Here, our trade has started. So we play it. Look here, the liquidity is not booked. It is booked in which session? New York. Look here, it booked the same time. The liquidity was booked at the same time in New York. What did the market do? So in the market, we are losing on this low and the market should eat below this low. So now look here, below the low, the market tapped. Look here, it tapped, swept all these lows and now we wait for the structure to change. Then if we look at 5 minutes, the market has gone because we put it on the side speed. So no issue. Now we put it on the other side and wait here. And here, what is it saying? It's making all these range liquidities. These range liquidities are being made here. Put it on the daily. Look here. It went up, but see if it's bullish, then it should take something here, right? Or high. If you see here, this is a full bearish engulfing. Here, this candle has engulfed this candle, so this can also make it sell. This is also there. We have to trade this low and bring it to this low if it plays. If the structure changes from here, we will buy it and take it up. Let's go now. We wait here for the structure to change. Look at H1, its low is lying here. And what is the market doing? It is trying to go towards this low. It is trying to go towards it. So we wait here. If we get any confirmation, we will buy. Otherwise, if you see all these liquidities are lying here, after picking them, we will go bearish, which is our upper bearish pattern. The market is still bullish. Look, the market is still bullish. And after being bullish, it is tapping in the same zone. And after tapping, the market has sold. So now we manually take the sell here and can play it to this low where all these range liquidities are lying. And what base are we making? Our base is this candle. So let's see what the market does. Here, still bearish. See, the market is bearish. If you look at H1, the market is still bearish. Okay, here we put it. So here. Here, and if you put it on B1, now see here, this candle has picked it, but this low is yet to be picked. Look here, if the market picks it from here, we will go bullish. It will go bullish on this base, so it has already picked it. So from above, this engulfing remained with the bearish. Look at the structure here. On H1, it is bullish. So here we wait. Look here. The previous day's two picks might not have happened. Here we wait. Does it pick here or not? It will pick a side and we will react to it, right? Otherwise, the position is still pending low. The market has to come bearish, swap this high, and the market can also come bearish. See this. Does the market swap or not? Here we let it run. Let it run. The market is coming bearish. See, now the low is picked. See, now the low is picked, which was our liquidity zone. So now we also look at the session here. The session is here. See, New York is open. So here we should plan it straight after a short time. After which we are staying bullish. See here, a small jump happened. Brother, both buy and sell sides were given. So here we can also plan it straight. And here on 15 minutes, the sell side has happened. If you put it on H1, here the previous candle of the group. Here we take a risk, which is our SL. We refine it a bit here. Where should it be? So let's refine it a bit under this low. Our SL is A1 by. one. And see here what is still remaining. This engulfing has also played out. This engulfing has also played out. Now, which zone is left here? The zone to be tapped is left. This one, this candle engulfed this candle. So this zone is yet to be tapped. All the rest have been tapped. So this is a fresh zone. We cannot take it. Now we put it on H1 here. And on H1, we see how the market wants to be bullish. See, the market has become bullish. The sell side and buy side cycle is also here. So now we know which fashion the market is running here. Yes, New York has passed. New York has passed. So here, if we see the market is still bearish, so let it run, no issue. It used to happen. We will refine it. Now see, which one is left here? The early entry we made, but the market did not become bullish. These lows are also pending, which are pending in the market. After these are picked, we will make it bullish again. See, the market is bearish, and here on 5 minutes we refine the entry. See, the sell side and buy side liquidity has happened. So here we buy it simply again. See how much is $5. After $5, our target is the same zone we are doing. Okay, now we go back to H1 and wait for this thing. We also look at the session here. If we trade again, the daily picks it in New York, then we will buy it again. Otherwise, we let it run. See this. What happened here? All the rules are fulfilled. The sell side is also done, and the buy side is also done. And on H1, the structure has also changed. The daily has also picketed. So we let it run now. See, the market came back. Why did it come back? The next day, we said it would pick the low and the market should come bullish. Some profit was taken. Ours was only $5 here. No problem here. See the session now. We also check New York because the market is doing it here. See, the buy side and sell side have happened here. So now we buy it easily because our market is buy. We want to stay on the buy side. Why do we want to stay on the buy side? Because what we have is telling us to go to the buy side. If we refine here again at the 5 minute mark, then the sell set has already been on the buy side. There is range liquidity here. If the market comes here, we will take another buy. Look, you have picked it, so now we buy it simply because we want to stay on the buy side. Here we refine a little bit like this. Yes, like this, it's fine. And with the given here, it's fine. Otherwise, if we look, we can bold it if you want. All this liquidity is in the market. All this liquidity is because this zone, if it's fresh, if not, the market can go up. So you can keep it here as well. Otherwise, we will exit from here, which is where the flip comes. Okay, now we put it in. And if you see the session, New York is about to open. So we do the New York video. In New York, what liquidity is there? How many such trades we have to make? One, two. And the third mistake we keep making is not betting. We are not betting, meaning we are not patient, that we are not betting on New York. We put it here by minute bet on New York here because all the liquidity will bet, and then there will be a collapse here because now New York has come. It has backed all the liquidity here. So now we buy it again. We buy like this, keep the SL here, no issue. Our SL is happening and our targets are also getting bigger, right? Our targets are also getting bigger here. If you see, there was one buy and we have one buy here. These two are our buys. We keep them here, no issue. Let's go. Now the market has changed on H1. So you run H1 here. See, the market is bullish or New York has also come here. The sell side is done. You bet on the buy side and see the market momentum here because there was news. Before the news, the market stopped everyone out. And then what happened? The market became bullish. See how big a value you got in the news. If the traction is clear, you don't need to be afraid at all. If the traction is not clear, then you will always lose in the market. Okay, now we let it run naturally. See, the market picked this liquidity but didn't tap this room. It will tap this room, then we can do it. That's fine. Now here, if you see the market is low or picks and becomes bullish and it picks it, okay, these two things happened. And then we have this engulfing pattern, which makes it perfect here. So here we also see the H1 structure. We see the previous day's liquidities, they have increased, and our review days one is lying here, which we tap the market. Is bullish here. See, picking these lows, the market is becoming bullish. So if the market is becoming bullish here, we try to make it bullish here. The target is this, and we are taking it just below here. Now we let it run, wait for the bullish. If it happens, we will buy it. See, the target is done here. So here the market is tapping this zone. So now we see the texture changing here. See, the market is still bullish. This zone hasn't been picked by the market yet. Still bullish. Market still bullish, bullish, bullish next day. It's not changing there. If you see, we are looking for an entry there. The texture is not shifting. See, the market is still going bullish. Next day it didn't go up. Next day hasn't happened yet. So see, latest day here, here the texture is not shifting. Here assistance, here make another. It's always been a bearish market here. So we set a buy position, right? After setting a buy position, the market picks up liquidity. Now let's wait for the next day. The next day opens, and if a sell is to come in this market, it will come after picking this low. If you see, after picking this low, a bullish move can also come, because if you see, this candle has engulfed the previous one, so it can be a single ping pong. Now this run, we remove, which can also make it bearish according to the structure. If you see, it can make it bearish. There's range liquidity here, which can make it bearish. Now let's put it on H1. After putting it on H1, see, the market now has picked liquidity. You can manually sell in this, and we have to be very cautious, because the market can buy after this low, as there's an engulfing candle below. It can buy, but the sell we have confirmed is after this liquidity. It exits the market. See, it has picked the previous day's low here. It has also picked the previous day's low. So now this low is here and all these highs are here. Now let's see it on H1. After picking this low, the market turned bullish. Let's also look at the session. It's not New York yet. New York, now we wait. We won't take this takeover. Yes, New York, where has it come now? New York has started here. So if we put it on a line chart, the market structure hasn't changed. If we see here, after picking this liquidity, the market structure has shifted here. If you see range liquidity, here a buy suits us, not a sell, which we have exited from this sell. Here we keep its effect, and our target in daily will be this zone, and our target is this one, which is all our liquidity. Let's see, but here the market is bullish, bullish, bullish. The market has turned bullish from here. It turned bullish from the same zone. The selling we had also started, and the buying also started here. Here buying was left, and then buying happened here, which is in this zone. Ahead there's no such zone. These are all fresh zones, and sorry, those are other zones, which here we now show it in detail. Its work is done. Now for buying, we have one level here, one here, and if you see above, this whole zone has been tapped. So the market should come above here to take liquidity. Okay, and the market has also made this low high, and see if the engulfing candle is forming. If it closes bullish, we wait here to see what the market does. See, after putting it, see it closed bullish. After closing bullish, this SL the market has taken, because it has already taken it. So if the market can come here, it should come to this low if its backside liquidity is okay. The market returns there. We will wait for New York again. New York has opened here. After opening, if we put it on daily, the market is taking its high and returning. So we have to wait a bit for its liquidity to be picked. Who picked it? So here, let's move to 5 minutes, 15 minutes. What are 15 minutes saying? Sell set, buy set, Turner liquidity has also been taken. Here we take a buy saying this is in buy mode. So it will be very risky. SL is very big. So SL, we make it smaller here. We adjust SL here. And who are we targeting? Who are we targeting? Because now we are in mid. So any trade in mid will be risky. The market is bullish, bullish. Midday, I think, has opened. See here, after targeting SL here, the market is back. The market is still bullish. Now, for the market, this point remains and this point remains. Candle by candle, a wick is going here. So let's see which side the market goes. Now, we speed it up a bit and see if the market sweeps the low and flicks. Okay, here we put it on the band. In Gotis, the news candle exits at this time. See here, the market is buying from this structure. From the same level. So here we see, wait, bullish market. Okay, from here the net we refined seems to have been reduced a bit. We stop out. The market turned bullish. Which session is it here? New York. Okay. We are done now. This was major liquidity. After picking it, whether the market moved or not, no problem. Okay, we will start from here in the next class. And if you are learning something, please comment and let us know. And make sure to backtest it, and if you haven't liked or subscribed to the channel yet, please do so. Like and subscribe so that you get more upcoming classes. Okay, see you in the next video. Goodbye.